Hey guys, so understanding candlestick patterns is crucial for trading success. It enhances your market analysis and it helps you to make better trading decisions. I'm Ellie from Epic Scouts. So in this video, I want to go over 5 of my favorite candlestick patterns. And I want to show you how I use them specifically as entry signals alongside a confluence of other signals to make trading decisions. So let's dive straight in. So the first candlestick pattern I want to look at is the engulfing candlestick pattern. And I'm sure you've seen it in many of my previous videos, but I find it a very powerful candlestick pattern. So this candlestick pattern is very easy to understand, and it's a candle in the opposite color of the previous one, and it completely engulfs the prior candle. So a bullish engulfing candle opens at or below the previous candle's close, and then it closes above the previous candle's open, making it appear as if it's engulfing the prior candle. Let me show you an example. So here we have the pound dollar chart, and we see a strong support level where the price has bounced multiple times, indicating that this is a well-respected level. And as the price comes back down to this support, we anticipate a bounce up. But before entering a trade, we need more confirmation. Here we see a bullish engulfing candle that completely engulfs the previous red candle right at the support level. So I like to see price moving above the 50 and 200 EMAs. This is an extremely bullish sign, and we can be confident that the price will rise from here. So we enter the trade, set the stop loss slightly below the support zone, and look what happens. Now, just because an engulfing candle often signals a reversal in the market, it doesn't necessarily mean it's always going to happen. You want a confluence of other signals, as I showed you in this example. You want the strong level of support or resistance, depending on whether you're going long or short. You want price above the 50 and the 200 EMAs if you're going long. And of course, you want to see that engulfing candlestick pattern. Next, I like to trade on momentum candles, and I really like these candles because they're very easy to spot, and they're basically 2 to 3 times the size of your previous candles. This candle basically signals a continuation in the direction of your candle. In other words, if it's a red candle, your direction will continue down, and if it's a green candle, your direction will continue up. And the most efficient way to use them is in choppy markets where the price is moving sideways. So you see a sideways market, then a huge momentum candle that is 2 to 3 times bigger than the previous candle, and this candle breaks out of the range, and you can be fairly certain that the price will continue in that direction. And this is often because such a large candle will trigger stop loss levels, which adds fuel to the direction and the momentum of the market. For this example, we're using the Euro USD chart, and you have what looks like a double top. You then see this huge red candle break down and close below the 50 EMA with huge volume. And you may enter at the beginning of the next candle, place your stop above the 50 EMA with a 1 to 1.5 risk reward ratio. And again, this momentum candle is the trigger for the trade, and alongside that, a confluence of other signals. It's not the sole reason I took the trade. Then you get the Doji candlestick pattern, and again, this is a very powerful candlestick pattern that many traders recognize and use. And basically, it's a very thin body with the open and close prices very close together, but with long wicks on either side. So this pattern is significant because it can indicate an impending reversal, and it basically represents market indecision, and this often occurs when the price reverses direction. So if the price has been trending down and you see a green doji, this suggests that sellers are losing confidence and that buyers are starting to step in. And to confirm the reversal, I'll wait for 2 or 3 more candles of the same color following the doji before I enter the trade. Now, you should be aware that there are different variations of the doji candle. So you also get the long-legged doji, the dragonfly, and the gravestone, but they all convey the same message that a reversal is about to occur. Next, you get the hammer and the shooting star patterns, and I find these are also very popular trading patterns that many traders use for triggers. So the hammer is a candlestick pattern that typically signals a bullish reversal, and it has a small body and a long lower wick, and it shows that although there were selling pressures during the day, ultimately a strong buying pressure drove the price up. And the color of the body may vary, but green hammers indicate a stronger bull market than red hammers. Then the shooting star is similar to hammer, but it occurs after an uptrend and has a long upper wick, and it suggests that buyers have pushed the price up, but that sellers have overpowered them, indicating a potential bearish reversal. There are ways to identify these patterns using your trading platform. So you can use TradingView to make it easier, and you'll simply go to the Indicators tab, type in the candlestick pattern you're looking for, and then TradingView will highlight it on the chart for you. This way you don't have to memorize all the patterns, and TradingView will actually do the work for you by highlighting them on the chart. So here we have momentum candles, here are hammer candles, and then here we have dojis, for example. Thank you so much for watching. If you enjoyed this video, please take some time to like, and if you're not already subscribed, please subscribe to our channel for more content like this. See you next week.